It's that time of year again. Claim all your income and claim all your deductions. Now, I heard that tip from Tracy Byrnes, and she has written a book, Deduct Everything. Hundreds of tax tips, legal write-offs, credits, and loopholes. Boy, do I need your help, Tracy. Welcome to the truth.
Thank you for having me.
That's our pleasure. So tell us about the book. How did you? What is your background? What brought you to write this book? And I'm seriously, I need to save money on taxes this year. It's going to be it was a good year, but it's a bad year, if you know what I'm saying.
Of course, and that's the problem, right? We make a lot of money, but we don't want to pay taxes on it. I think the One Big Beautiful Bill Act, while it's fabulous and was well intentioned, it's very complicated. The tax code is getting more and more complicated. So, the premise behind the book was to try to simplify it. So we wrote it in just tips. You could just hop to a chapter that pertains to you. It's by no means written to read cover to cover unless you have insomnia one night and you need some help. But it's more about highlighting what's available to you. That way you can either take it to your tax preparer and say, do I, this feels like it's me. Do I qualify? Or when you sit down and use a tax preparation software, you go through those sections and you take your time and answer all the proper questions.
I want to just ask you, and this is probably one of the only people in America who have said this, but is the big, beautiful bill and the promises that it makes a lot to do about nothing? Let me tell you where I'm coming from. First off, no tax on tips.
Right.
How many servers are paying tax on tips to begin with? Does it just let them sleep better at night, maybe? But is it material in the big scope of things? Similarly, no tax on Social Security. Well, I don't think it applies to me. I don't know how many people it does apply to. But maybe you can tell us what the threshold is. But if you make over a certain amount, it doesn't apply to you, which is true with so many deductions.
Probably all of them. They probably all in some shape or form have an income limitation on them. The thing with the tax on tips, and it's almost frustrating to me how misleading it's been. You have to pay tax on your tips. In theory, to your point, I'm not sure how many people actually report them, but you report them and then you see if you qualify for the deduction. It's a $25,000 deduction. So it's not across the board. Your tips are tax-free from here on out. It's not it at all. Quite frankly, you should pay into the system because you pay Social Security and Medicare on those tips, which will help you down the line. So I think there's been a lot of misleading statements out there by the media in particular. And that was, again, part of the premise behind this. Let's clear this up for people.
Now, when you say you pay into Medicare, that is another source of puzzlement, bewilderment to me, because I thought that I'm 72. I'm still working. I'm still have payroll withholding, and I pay a lot of money in tax. I thought, perhaps naively, that all that money that I've been paying into Medicare, I've started working when I was 12. I don't know when Medicare came into existence. I think I started working before we had Medicare. But regardless, why am I still paying a monthly premium for medical insurance to Medicare?
That is a question for your president. I think I'm with you. I understand. I don't know why either. You've earned your time and you deserve a little help from the rest of us, but that's the way the system works right now. I'm with you.
Well, I thought it was actually my money. I thought that my Medicare was bought and paid for with my money. So when I became the tender age of 65, I guess, that 65. I could opt in, and that I would no longer have to pay for Medicare. But my wife and I are both paying. I was paying $800 a month, and then that's a lot of money. And then I joined Humana and their PPO, and my premium dropped to $400 a month. But now I've got copays and deductibles and so forth. I don't know. I spent a week with an insurance man last night. Some I think what was his name? Fields. What was the comedian's name in the 20s? You're much too young to remember. I can't. What was his name, Anthony? He used to hold his cigar and say, yeah, it's all like children. Barbecued. W.C. Fields,
No.
thank you.
Yeah. W.C. Fields.
Yeah, not Groucho Marx. He smoked a cigar
No,
also.
I was going to say Groucho Marx, but
Yeah, but it was W.C. Fields. He said, yes, I spent a week with an insurance man at my house last night. Sorry for the insurance salesman in our audience. I guess the radio went click. But why? I mean, inquiring minds need to know. I mean, why am I paying insurance premiums? You don't know. I don't know.
I don't know. And I think there's a lot of questions surrounding all the things we pay into. And as I've said previously, I think the tax code has become a big book of favors. And there's a lot of people paying a lot of things that they just don't understand why they're paying it. And so simplifying the tax code would be a real gift to the American people. But we're a long way off from that.
It seems to me that nobody gets the shaft except for the American people. And then we
Right.
get it at every freaking turn. And,
Right.
you know, I think Malcolm Ford Jr. was so right. If we paid a fair tax, it would solve every problem. We wouldn't have to worry about loopholes. We wouldn't have to worry about special interest. We wouldn't have to worry about some people getting favors. It would set the right policy for our country. And for those that don't know, I mean, we would pay basically like a VAT, a value-added tax, like they do in Europe, just like a sales tax here, except it would be a bigger number. But it would discourage consumption. Oh, maybe that's why it won't fly. And it would encourage savings. And the IRS would be extinct. We would save all those 100,000 government workers or more, and the amount of money that it takes to keep the IRS in business. And we'd get rid of those volumes after volumes after volumes of tax code. It just makes so much sense to me. Is it something that will just never happen?
Well, and Steve Forbes wanted a flat tax for a lot of years too. So I think what both of them would do is take away the piece of the code now that I think lower and middle income people families always feel like the rich are getting away with something that they're not, that the rich can afford tax attorneys and very expensive accountants to figure out all the loopholes so that they save more money than lower and middle income families. And I think it would take that away. Once you understand what you're paying and why you're paying it, maybe people will be more inclined to pay it, as opposed to the Wesley Snipes of the world that felt it wasn't their obligation to pay taxes. I think that it just makes things simpler, and simple is always better. But we're so far from that because the tax code is a book of favors that they give to each other when they're trying to pass laws and regulations, and they throw things in the tax code just to get things done. And sadly, it's become nothing but a stool height full of confusion.
Well, the flat tax or the fair tax, they would get rid of all the CPAs in the world too.
Well, there's that.
And I guess there would still be corporate tax. But if you listen to Elizabeth Warren, that's a meaningless number. Yeah, right. So give us your top 3, 4, 5 deductions. What should we be looking at?
Well, look, if you are in hospitality or an industry where you do collect tips, make sure you see if you qualify for this deduction. It's great. 25 grand is great. If you could save on that, why not? Same with overtime. That goes to all our firefighters, police officers, EMT workers, people that work very hard and work overtime. If you qualify for that overtime deduction of $12,500, you should take it, get it. The standard deduction this year is higher, so a lot of families are going to fall into that. So you're not even going to have to worry about itemizing your deductions. And then the last thing I would say is April 15th is 2 weeks from today. If you cannot get your tax return done in time, please file an extension. It's form 4868. File it. The IRS just wants to hear from you. Just make sure you get that in before midnight on the 15th, and then you'll have till October 15th to file your return. If you owe money, though, the bill is due by midnight on April 15th, regardless of whether your return is ready.
Yeah, and if you don't pay, then you got to start paying interest on the money that you eventually will have to pay.
Right. So you don't want to pay interest and failure to file penalties as well. So at least file the 4868.
Okay. Now, how do you buy a new car for up to 40 grand and be able to write it off immediately?
You don't. It's interest. There's a $10,000 interest deduction, which is great. You may or may not qualify for. It depends again on your income level. A car has to be brand new in the United States. It cannot be a used vehicle. A lot of people think that they were going to, I think this one actually was one of the most misleading. So many people walked into their tax preparer's office this year thinking they were getting a $10,000 break, and they don't qualify. So watch the income limits on this thing, but it is on the interest, not the loan. And again, there are income limitations.
So give us some more. Get the government to help you pay your energy bill. That would be a good one. How does that work?
There are definitely write-offs for solar and things like that in there. I would say, like, when you either flip through this book or go through an online tax preparation software, answer every single question, because you never know what you're going to qualify for. I know it's drudgery, and I really do encourage people to try to prepare their own tax returns, because at least once in your life, you get a sense of the fact that this is one big mathematical equation. There's money in, money out. But when you walk through these software programs, they ask you all the questions, and it would jigger your memory into things that you may or may not qualify for.
All right. And you say there's a better way to save for college?
100% use a 529 plan if you can. If you have a little one, anybody has grandchildren or babies out there, see if you qualify for those Trump accounts. That's free money. The government's giving you money. Michael Dell is adding to it. It's not life-changing on any stretch, but it's something that cannot be used for college. Let's be clear. That is retirement savings. But still, if you have little ones, use it. If you have kids that are little, that are going to college someday, really think about using a 529 plan.
So tell us what the 529 plan is.
It's really great, actually. And it's like one of the things that grandparents can do for their grandkids without writing checks and handing it over. You can fund this. You can front load it up to 5 years if you wanted to as well. And then this money just grows tax-free for your college-bound grandchild, daughter, son, whatever. And when they pull the money out, when it's time to go to school, there's no tax on it as long as they use it for tuition, room and board. They buy laptops, things like that. And the other thing, too, is you can use it for private institutions, K through 12. So if you send your child or grandchild to Catholic or private school, you can use this money that's growing tax-free, which is a beautiful thing. You can use it to pay all those tuitions. It's a lovely gift.
What's the limit per year?
I think it's 60 grand this year.
Wow. So you're saying that I could give each of my grandchildren $60,000, and that would not count against the unified credit or the tax.
The gift tax?
The gift tax?
It might. Actually, it might.
Okay.
But it's okay. That's still good.
But it could then be used later in their life to pay their educational expense.
Right.
And if we invested in Tesla and the autonomous car and Optimus get delivered, then no telling they could go to medical school and pay for the residency.
Yeah.
Tax free.
Well, I mean, so why not, right? So if grandma and grandpa every year, because it's $18,000 a year now. So if grandma and grandpa every year put $36,000 in together, look at what you're doing for your grandchild. I think it's beautiful.
But
they have to go to school. The other thing that's really cool about these things is they're fungible. So if little Johnny decides he doesn't want to go to medical college, let's say, but little Laura does, you can give it all to her. You can just swap it over in her name and send it over to her, as long as they're siblings. Siblings, parents. If mom wants to go back to school, in the family, you can use it fungibly.
Okay.
I had 3 for my kids, and I ended up using them all around until we finished them.
That is great to know. And then the Trump accounts, you get to put in what?
Up to, so you get $1,000 from the government. Five. You
Five
get 1,000
grand.
from the government. You could put another five. It sits there. It has to be, in theory, for retirement for the child. So you cannot use this for college.
Is that 5K per child or
Per
5K per
child.
anybody that wants to give to the child? Like, could
Per
my wife give
child.
five? I could give five. Somebody else could give five. All of our
No,
listeners
it's.
could give five.
I wish.
As a rich grandchildren. So it's just
I'm,
5,000 one time per
I might go
child.
have another child because of that. Now it's yes, parents, grandparents can contribute one time. It's a one-time 5,000 per year.
But the government's going to kick in a grand, and Michael Dell
A
will kick in
grand.
a dan
And
a
Michael
grand.
Dell's kicking in extra money too. I don't know. It's not a full $1,000 from Michael Dell, but he's
Okay,
kicking in stuff too.
millions of dollars that he has donated for that, and that is such a beautiful concept. And for retirement, it's not like a traditional IRA. You're not going to get taxed on it when you take the money out when you're 65, or
Well,
is that to be determined based on
no.
who gets into
That's the
power?
idea. That's the idea. That is, as long as you wait, the child will get the money tax free. That's the idea. Now, you and I both know it's a long way off from babies born today and their retirement age at 75. So, like, anything could change. The idea being this will not be taxed when they need it in retirement.
Well, that is a beautiful thing, and I
Yeah.
guarantee you that $6,000 or $7,000 can multiply really quick. Now, you didn't say it's 5,000 a year, did you?
No. 5,000.
One time.
You're one time.
Yeah, I think that's right. Well,
Yeah.
that is a really good device to know about. Is there a time limit on it? Do you have to do it before the child achieves a certain age?
No, I don't. You know what? I don't know. Actually, that's a great question. What I do know, though, is that it's kids born like today and maybe over the course of the next 18 months. So people that are thinking about having babies, get going.
Yeah. All right. And then finally, you say the most overlooked tax deduction, even one that many accountants don't even know about. What would that one be?
Well, I think there's so many of them because the problem is, I think for a lot of people is that they don't prepare all the things. I think self-employed people overlook so many things. You qualify for so much. I have said this before that if you work from home and you actually have a home office, you should take the deduction. Make sure you're not sharing your home office with your kids' playroom and you're not working out of the dining room. But if you have a home office, take the deduction. The standard deduction this year has gone higher. So a lot of people will qualify for that. And that's why they're expecting people to see more money, more of a refund. I will also say, lastly, that the goal is not to get money back. The goal is to be net zero. You don't want the government to have your money all year long. So those of you out there that are, want and are expecting big refunds, rethink that. Maybe you're having too much money withheld. Maybe you're overpaying in estimates. Rethink that because the government,
Do they pay you back with interest?
no,
A little bit of
right?
hypocrisy going on there, I would say.
And meanwhile, they're earning interest on your money, right? So
Yeah,
why
for
are we
sure.
giving it to them?
So the home mortgage deduction is still in play?
And the state and local tax deduction is back as well. And that's really important for people in New York, New Jersey, Connecticut, California, those high tax states. It's very important for them. It's super helpful, especially for our middle income families. Again, though, if you make too much money, you're not going to really qualify for it because there are income limitations on everything. But for those that qualify, it could be up to 40 grand, which is amazing.
Wow. And what do you mean for those who qualify? I mean, I got a
If you make
mortgage.
too
Do
much
I get?
money,
Oh,
no,
there
but
we go.
if you make too much money, again, yeah, you don't qualify.
Well, why is Elizabeth Warren so concerned about the rich not paying their fair share? Sounds like the tax code's built for everybody but the rich.
I have to tell you, I don't think you're wrong. And I don't know what she's talking about either, because wealthy people get gypped out of everything, especially wealthy people that don't have write offs. They get gypped out of everything.
All right. So the book is Deduct Everything. The author is Tracy Byrnes, and she's an MBA and a CDFA. Wow. One smart lady. I bet the cost of the book is deductible. Yes.
For tax preparation purposes, it might be, right?
I would think so. It's business education. Thank you, Tracy. Appreciate you coming on. Where can people keep up with you?
So I'm at Tracy Byrnes on LinkedIn. The website is Tracy Byrnes Wealth. Call, reach out anytime, any questions. Happy to help.
Thank you, Tracy. Very timely information for this very happy time of the year known as tax season. Happy if you get a refund, but Tracy says that's not necessarily a good thing. With that, we'll leave it with you and have a great rest of your weekend.
Thank you. You too.